Rich nations like Canada have struggled for years to raise more revenue from large multinationals such as Google, Amazon, and Facebook, which often book profits from sales in countries around the world in jurisdictions where they pay little or no tax.
If we see the reality in the world, there are a lot of corporates that find ways not to be taxed at all.
Now, in an effort being branded as a tax fairness initiative, G7 finance ministers, including Canada's Chrystia Freeland, have reached a deal that would see multinationals face a corporate tax rate of at least 15% in jurisdictions where they make their sales.
We're going to level the playing field and inject that principle of fairness into our global tax system. That's the prize.
In Canada, the combined federal-provincial corporate tax rate right now is about 26%.
This will affect other jurisdictions that have a much lower or non-existent rate, and could potentially help Canada play off its other strategic benefits.
Freeland said the initiative is good for Canada.
Multinational companies need to pay their fair share of taxes. Jurisdiction shopping allows them to avoid doing that.
But the federal Conservatives oppose this global tax deal.
Although we strongly support taking steps to combat tax evasion and tax avoidance internationally, we know that happens. But that policy should be set in Canada because there are, I believe, serious ramifications, not only for our sovereignty, but our ability to promote our own economic interests here at home in Canada.
But the G7 finance ministers believe a corporate minimum tax could raise tens of billions of dollars for governments who have gone deep into deficit to prop up their economies during the pandemic. Saturday's agreement lays the groundwork for more intense talks on the issue next week when G7 leaders, including Prime Minister Justin Trudeau, gather in England for their first in-person meetings since the health crisis began. David Akin, Global News, Ottawa.